Hi, this is Kim Woodbury, the director of the Miami Valley Small Business Development Center in Dayton, Ohio, and I'm going to go over the Paycheck Protection Program loans. Today is April 6, 2020. This has been an evolving situation and things change, so I want to make sure you know what date it was recorded so that you can determine if you have the most recent information. So the Paycheck Protection Program provides funding to help small businesses cover their near-term operating expenses and to provide an incentive for employees to retain their employees. These are all related to the coronavirus. You cannot use these funds for expanding a business or starting a business. These are to help you through the coronavirus crisis. Other features of this loan are that there's loan forgiveness of up to 8 weeks of payroll based on employee retention and salary levels, no SBA fees, and at least 6 months of deferral on payments. While it's deferred, interest will still accrue though. So the eligibility for the PPP are that you need to be a small business concern with fewer than 500 employees. There are some exceptions to this rule. Some industries are still considered small with over 500 employees. Check with the SBA's website to determine if you qualify if you're not sure. The 501c3 private nonprofit organizations will be eligible, as well as the 501c19 veterans organizations and the tribal business concerns that are 31B2C. Also, individuals who operate as sole proprietor or as an independent contractor are also eligible. And some of the rules for franchises have been eased, especially for restaurants. So the rules are based on per location employee levels, not an aggregate of all the locations. And the website at the bottom of this will has a list of qualified franchises. Okay, so the PPP loan uses are for payroll costs, costs related to the continuation of group healthcare benefits, which include insurance premiums, payments of interest on any mortgage obligation, and that does not include prepayment or payment of principal, rent, utilities, and interest on any other debt obligations that were incurred before the covered period, which is February 15th, 2020. The terms of the loan are it's a $10 million maximum loan amount with 1% interest and a 2-year maturity. These loans are administered by SBA lender banks or other federally approved lenders, so you'll go directly to the bank to apply for these. It's not done online through the SBA site. The banks are taking the applications. There are no prepayment penalties, and payments can be deferred up to 6 months. Another thing is that any debt that's forgiven will not be taxable. The loan size is determined by multiplying your average monthly payroll costs for 2019 by 250% or 2.5. And this excludes wages and salaries of individuals over $100,000. So if someone makes $125,000, it would be based on only $100,000. If you're a seasonal business, you can use an average monthly payroll cost between February 15th, 2019 and June 30th, 2019 for your calculations. And if you're a new business, you can use January 1st, 2020 to February 29th, 2020 for your calculations. So eligible payroll costs include compensation, which are salary, wages, commission, payment of cash tip, payment for vacation, parental, family, medical, or sick leave, allowance or for dismissal or separation, payments required for the provisions of group health care benefits, including the insurance premiums, payment of any retirement benefit, and payment of state or local tax assessed on the compensation of employees. Ineligible payroll costs are employee or owner compensation of over $100,000 on an annual basis. Taxes which are imposed or withheld under chapters 21, which is FICA, 22, railroad tax, railroad retirement tax, and 24, income tax withholding of the IRS code. The compensation of employees whose principal place of residence is outside of the United States, and qualified sick and family leave for which a tax credit is allowed under Section 7001 and 7003 of the Families First Coronavirus Response Act. So when you apply, you're going to need some documentation. So you're going to need to submit documentation such as payroll processor records, payroll tax filings for 2019, documentation that shows how much you paid as an employer for employee group health insurance premiums for the past 12 months, documentation showing the amount of retirement plan funding that the employer made for employees over the past 12 months. That includes profit sharing, cash balance plans, simple and SEP IRAs. Note that employees' own 401k salary deferrals don't count for these purposes. If you're a sole proprietor or an independent contractor, Form 1099 will show your payroll or your income and expenses from a sole proprietorship from your taxes. So if borrowers don't have any of that documentation, they must be able to provide other supporting documentation, such as bank records that show the qualifying payroll amount. For forgiveness of this loan, there is a 75% rule. So at least 75% of the Paycheck Protection Program loan proceeds must be used for payroll costs. And you will need to document the how the proceeds are used for payroll costs in order to determine the amount of forgiveness. So the process for forgiveness will be done later. It'll be done through your lender, but you will need to include documentation verifying the number of employees on payroll and pay rates, including IRS payroll tax filings and state income payroll and unemployment insurance filings. Documentation verifying payments on covered mortgage obligations, lease obligations, and utilities. And you're going to need to certify that the documentation you provide is true. Okay, so some questions we've been having are, what if I've already laid off employees or cut pay? So if you've already laid off workers, you have until June 30th to restore full-time employment and salary levels for any changes made between February 15th, 2020 and April 26th, 2020. What is considered payroll for sole proprietors and independent contractors? Again, that's wages, commission, income, or net earnings from self-employment. So another question we have are, when you're calculating your payroll costs, do you include the 1099 contractors in those calculations? And that is no, because independent contractors can apply for these loans themselves. Okay, well, if you have any questions, you should probably talk to your local small business development centers. In Ohio, you can go to this website, clients.ohio.sbdc.ohio.gov. And if you are outside of Ohio and you want to find your closest Small Business Development Center, you'll go to the America's Small Business Development Center's website, which is ASBDC. So their website is americassbdc.org. So thank you very much. Good luck and stay safe.